All right, my name's Bob Lample, and I own actually two companies. One's an accounting company called Accounting Business Center that I've had for 13 years, and out of that morphed a new company that I formed called Business Plans and Mooring, when my CPA partner had to leave the company for personal stuff. And do a lot of focus in all areas of accounting, obviously. Now one of my main focuses is on doing professional business plans, especially even if you're going for funding, because most of the banks will require a business plan. And also, my QuickBooks training is my next most critical thing that I do within my company. I am a certified QuickBooks Pro Advisor on most all of the versions of QuickBooks out there. I've gone through lots of training on it. And like most softwares, most people just scratch the surface on what you can do. If you look at any software that's out there, whether it be Excel or Word or anything, you know the basics a lot of times, but you don't know all the capabilities of it, or use the capabilities of it. We're going to show you some things. I'm going to show you some things today that are not typically published in any of the manuals that you have on QuickBooks, how to do stuff. And I'm going to show you the importance of, first of all, how this software can really help you properly account for everything within your business, because it is extremely critical. Before I get into that, let me just tell you a little bit of background on me. Besides, as a matter of fact, if you have one of the packets I gave out, I have a little synopsis of the services of the company. But on the second page, I have a little bio, brief bio on myself. You can read at your leisure. I've been doing this, like I say, for a long time, but it's. I was also the president of a statewide accounting, well, actually a nationwide accounting group, but I was a statewide president and for a year, and so I definitely know the tax angle and other side of the businesses as to what you're getting into. And I will tell you from a standpoint of the payroll services that you heard about earlier, believe me, I promise that you will not regret moving to a payroll service if you're trying to do it yourself. And I'm one telling you this who used to do payroll all the time through QuickBooks, because I do have a very good payroll module. The problem with that is it still takes your time up. And also, if you miss the deadlines for filing reports, the state and IRS are pretty vicious about coming after you on wanting more money out of you for not filing a report on a timely basis. So I do want to encourage you to really consider using a payroll service, because the information that they deal with does merge or does interface with your QuickBooks, so you can literally go online with them and import a data file that puts all the payroll in the right places in your QuickBooks. You can do it there as well as other banking activities. You can do your bank accounts and your credit card accounts if you have those also for the business, and interface them into the QuickBooks very easily. And so something we'll talk about a little bit later. Also, I have some excerpts on some of the other seminars I put on in this one packet on process of doing a business plan, the mistakes companies make when they start a business. And the last one I'd like to just call your attention to, it's starting a new business checklist. And it tells you a listing of things that you do before you open your doors, but it also covers things that you need to do after you open your doors. And if you'll notice that last line, it says to repeat those steps often. So take a look, especially because I know all of you are presently operating, but look at that last section there about the things you should be doing within your business. And even look at the ones before that to make sure you didn't skip some of the steps, because a lot of people do skip some of the steps. But that's 2 sets of handouts. Yeah, But anyhow, it's something we all need to do as far as run our business as a business. It is a business. And if you don't do things properly, you can get into a lot of trouble with the regulatory agencies that are out there. And as they mentioned earlier, they're hurting for funds right now. And one of the ways they are going to go get those funds is through aggressive going after everybody for penalties and for not doing things right. For those of you that have independent contractors, that is a serious issue, actually. And it's not quite 95% should be employees, but it is a high number of people that are treated as a contractor that's not really a contractor. They're technically an employee. It depends on how much control you have over that person. If you have very little control other than telling them what you want to do, or want them to do, excuse me, and also just some basic parameters of how you operate so they can do their job properly, they're still an independent contractor. If you pretty much tell them what to do and how to do it, when to show up, and exercise a lot of control over that individual, then you can get into trouble if you're claiming them as a contractor instead of an employee. And also another thing a lot of people don't do is to actually file the 1099s with the IRS at the end of the year when they do the reconciliation of the 1099s. They give them to the contractors, but they often don't do the last step, which is sending it into the IRS. So that's another critical thing that a lot of people skip on contractors that can get you in a lot of trouble. But enough of all that. I want to get into the QuickBooks thing. First of all, how many of you in here have already set up QuickBooks on your company or are using it? Just one? Okay, cool. Then what most of you will be seeing here is something new. So the rest of you, I take it, are you doing it manually on some other accounting form or Excel spreadsheet or ledger sheets?
Tried it and was confused.
Okay. Okay. I will tell you that QuickBooks is probably one of the best small business accounting softwares out there. It's made by a company called Intuit, and they named the company Intuit because what they do with the software is very intuitive. And it's a lot of logic in there where you're actually working with the software and it seems like I should be able to do this, and sure enough, it makes it easy to do it. And you'll see how that works in a few minutes. If you are trying to do everything by hand, or doing it on like a spreadsheet, Excel, something like that, you're really taking a lot longer to do what needs to be done from a bookkeeping standpoint than you would be doing it by doing it through an actual accounting software like QuickBooks. Because a couple things to keep in mind. It's easy to make errors on the math, on the adding up columns. Even if you're using Excel, you have to still transfer these numbers to your accountant or CPA to do the tax returns later on. And just the way that this QuickBooks software interfaces with everything, it's just make a change over here, it affects other statements over here. Because one of the things your CPA or accountant will require for tax time is a balance sheet and profit and loss statement and things like that. And you'll see some examples of that when we go through what we're talking about today. You can even put budgets in your QuickBooks software so you can actually compare your actual results with what you thought you were going to do on your budget, whether it be a business plan or your own internal budget. Very important. Also, if you're going after financing or grants, they need to see budgets going forward. And QuickBooks will allow you to fairly easily do budgets, especially if it has historical data going forward. Because I know a lot of you are thinking about getting grants, and that's another good source of income. Now, the only thing you need to be aware of is that there are criteria that each of the grant givers will have as to who they give the grants to. A lot of them require you to be a nonprofit organization, some don't. Some just want a certain criteria to be met as how you're helping. And a lot of you are helping people that couldn't get the housing elsewhere. That's something that would qualify you for getting some grants with a lot of the grant writers. So, but they need to have information from you before they will give you those grants. And one of the things they require is a budget of going forward in addition to the current financials. And I do want to mention one thing about grants is that it takes quite a while sometimes to get a grant because usually the people are flooded with requests for grants from their organization. So what typically happens is you apply this year and you often get the grant the next year in the process because they're trying to satisfy the people they had to skip over the previous year this year. So just know that when you go for grants that it's not a quick thing when you do it. So don't plan on, you submitted that grant today and you're planning on using that money next month or the month after, because it typically doesn't happen that way. But even though we like to, but I will say some grant writers or issues do actually act fairly quickly, depending upon their volume of request. But I did want to mention the grants. QuickBooks will help you give them the required information for obtaining a grant. But the other thing I want you to notice on here is you have a lot of areas up here. You have a section called vendors. Vendors are people you pay. Most anybody you pay is either a vendor or an employee. They're only an employee if you withhold payroll taxes. If you don't withhold payroll taxes from them, that goes on the vendor section. Then you also have customers. Customers are people that pay you. And so anybody, your residents and your homes are customers, is a good example. Because they're typically the only ones probably that you'll be dealing with that'll be giving you money, other than possibly grant people in other places like that. And then you may have employees. I do not have the employee section filled out. What I did is I made up a little dummy company called My WeCare Company on this. So what I'm trying to do on this QuickBooks file is to give you an idea of this QuickBooks is tailored pretty going to be dealing with stuff that you're already dealing with, hopefully. And as opposed to a lot of some trainings that I've seen where they're just generic and it doesn't really apply, and say, well, how does this relate and what about my situation? So I'm trying to make this more relative to what you're trying to do in your own businesses. Now let me ask you this, how many of you have multiple locations out of your ownership? I know we have at least one or two of them. Okay? Perfect. The QuickBooks will be a perfect thing also to handle that, and I'll show you how. Because sometimes it's very tricky to keep those locations separated. QuickBooks does it in an area that they call classes, or think of them as divisions, or in your case, locations. You may have one location over here, one location over here, and one location over here. I have actually set up in this dummy file a company that has 3 different locations. Even though it'll all operate the same, but I'll let you see how QuickBooks will separate that for you and make it very easy to use for doing your financials, especially come tax time. And also if you had to carve out or isolate an issue with a particular location causing a problem. So I have in front of you a syllabus, in essence, that has attached to it. Find the one that has the attachment to it. Thank you for printing all these out ahead of time. I didn't tell you I was going to have one with attachment to it. They're going to give you a place for writing notes alongside the different areas of the screens that we're going to be talking about. So that way if something pops in your mind that you want to take a note on. Because especially on those of you that do not currently have QuickBooks, you know, a lot of this stuff is going to be not make much sense for you for right now. However, you'll see something that you like. So please make a note of it on this other page, these pages that have notes on them. We're going to go pretty much in order on that. And we have a lot of territory to cover. I'll try to not dwell on any one area for a long time. But I do offer on-site training for you if you would like that later on. And I'll literally come to you and train you on QuickBooks using your data and customize your QuickBooks to your situation. Typically, a training session is around 2 hours long, and I usually charge $150 for that, just so you know that. But it's totally customized and personalized to your location that you have and what you're dealing with. So wanted to mention that, so you need that. But there are different versions of QuickBooks that are out there, and if you were to go shopping for a version, you're going to see, well, there's an online version, there's standalone version that you can buy at Sam's or Costco. And by the way, if you actually buy a standalone version, the cheapest price is either at Sam's or Costco, one of those type of stores, as opposed to going to Staples or Office Depot to buy it, because you'll usually save $50 or more sometimes. So, hey, it's all about saving money where we can. So, but I will tell you that when you look at the software, they usually have a flap that opens up, and you'll see this version has all these things checked off on what it does. The next higher version that costs about $150 more has all those same areas checked off, plus a bunch of other check marks below that on things it does that the other version doesn't do. I tell people to look at the things that the higher version does that the lower, cheaper version doesn't do, and see if those are things you even need. Most of the time, those are not needed by most companies. So no sense paying additional for the extra bells and whistles if you're not going to use it. So keep that in mind when you go look at it in the store. The online versions are good only if you're going to be accessing or have multiple people accessing the file from remote locations. If you're going to be running QuickBooks on your own computer, and usually you're not going to have other people inputting data, and even if you were, you can still use the standalone versions and have the other people input data. But if they're not accessing it remotely, there's no sense getting the online versions, which ultimately will cost you more money per year than buying the software. So, little things like that. But they have two main standalone versions, Premier and Pro. QuickBooks Pro and QuickBooks Premier. And a lot of the extra whistles are very, very minor. Like some of them do allow you to do sales and expense forecasting, even though they all have the budget programs built in anyhow. But there are a few extra little bells and whistles, and also there's some of them may deal with inventories differently. Well, you don't usually have inventories at your location, so that's something you don't need. Not a reason to get the higher price version. But anyhow, it's enough on that for right now. There are some different versions. Most of you, I think, will do fine just getting the regular, cheaper version, QuickBooks Pro, if you haven't gotten it already. Yes, ma'am.
Can you, can this product be downloaded on 2 different computers? It's standalone.
Okay.
If it's for the, or down to a network?
You can, but that's a good point. I'm glad you mentioned that, because there's one thing you have to know is that there's only one live data file.
Okay.
Now, if you're on a network at your location where you have a centralized data file, then you can have multiple computers with the software on it that can access that data. But you have to realize there's only one live data file. You can copy it onto another computer, but whatever they put on that other computer is not going to update the live data file. And
So you only can have one software on one computer.
You
The
can-
software only on one computer, and they say on the
I would suggest that unless you're networked. Or if you need other people from other locations accessing it, then think about the online version. That will be a good reason to use that, because that way multiple people can access the same data file. But thanks for bringing that up, because that is a very critical point, because a lot of people have the feeling, well, so you can input it over here, and they can input it over here, but it doesn't work that way.
I have one QuickBooks program. I have 2 separate businesses on it.
That's okay. That's
Yeah,
fine.
and it works
You can have
fine.
multiple data files for as many different businesses as you want on it. But again, each data file, it needs to be accessed by that one computer if it's not with network, so that's the live changes. And when you do a lot of people think that, well, I do backups, if I restore it, that'll undo what I did if I made a big mistake. No, that actually overwrites your data file to whatever data was on that backup when you created it, so it could potentially wipe out all your current data that you entered since that backup. So that's another mistake I had, because I had a client that made some mistake. They thought it was a big mistake, so they restored a backup file that was 2 years old. And that was the only backup file they had, and they were in big trouble because they were doing 1,000 transactions a month. So, needless to say. But anyhow, that's something to consider. There's lots of stuff with QuickBooks. Speaking of backups, I do suggest that you back up your data files, whether it be QuickBooks or other data files, frequently, because you never know when somebody may come in and steal that computer, or the computer crashes, or whatever the situation, or having a bit of fire in an organization. Keep your backups off-site if you can, periodically. At least take one copy off-site, just in case something happens in return. Okay, when you go to set up QuickBooks, it's fairly simple. There is what they call an easy step interview process that comes up, and it walks you through a lot of the questions. My personal experience is I don't particularly like any of the processes they do on the QuickBooks setup. The easy step process is okay. What it lacks is that it doesn't customize it to your situation very easily. And it'll give you a basic framework, and you'll initially choose some companies. They'll list you about 10 or 15 companies that are out there that might be sort of similar to what you do. The closest thing to your company is either a service organization or the medical, dental, or health services industry that they pull out. That's not really super close, but it's a starting point is all it is on the quick step interviews, and then you can come back in behind it and customize it to your situation. And I'll show you some of the things. One of the first things you'll want to do is to set up users eventually. Well, actually, I take that back. Initially, you're going to be using the default administrator code, or admin as they call it, as a user. That's perfect for setting everything up initially. But once you get everything set up, I want you to never use the admin code unless you actually want to basically add another user or change your tax return. Because unfortunately, one downside of using the default admin code is that it allows you to make any change, even if it changes your tax return for the prior year. And as a safeguard, you don't want to do that usually. So eventually, I'd like each of you to set up yourself as a user, and then any other people that you have as a user, because there's another advantage. If you have a bookkeeper that's just a data entry person, you can just limit them to the data entry and not have them see the sensitive financial information about what they're paying, you as owners and stuff like that, or the sensitive financial reports. However, you're under your name, we can set you up with essentially all the rights of the administrator except for changing your tax return. And you can do anything and everything else in the program. And if you want to change your tax return, you have to log out as yourself and then re-log back in as administrator. So, but anyhow, that's another story. But just know that you don't want to use a generic admin all the time for everybody, especially because that's actually sort of dangerous. But you do have a lot of power and flexibility in being able to specify exactly what each person can see or not see. So that's a great advantage of setting up the users. But one of the first things you're going to do is set up a chart of accounts. And I want to show you one that I set up that is, again, it's still generic, but I want you to get a flavor for what's going on. You're going to have bank accounts. Now, I set up a company anticipating 3 separate locations. And in this case, I went ahead and set up a separate bank account for each location. You don't have to do that. You can have just one bank account that deals with all 3 locations. The preferred way would be to actually have a separate bank account for each one, but then you deal with a lot more activity of transferring and a few other issues that you have to be sure that you keep them straight in your head, at least when you're dealing with one location versus another. But there is an advantage to having separate bank accounts for each location. And I set up an operating account and a savings account for each location. And then you have what's basically called balance sheet items, and it's going to start with the bank, and it's going to go all the way down to the equity section. And activity on what they call the balance sheet, and I don't want to deal too much on the tax and accounting side because it's most of you are probably not accountants and tax people. But essentially, whatever activity happens in this section doesn't show on your profit and loss section, which is your operational report that you get from your company. For instance, if you have a bank loan or credit cards, you're going to have balances on your credit cards, but the activity that caused those balances may be on the profit and loss statement. Like I went to the office supply store and bought office supplies, charged with my credit card. Well, that office supply expense will be on your profit and loss statement, but then the balance on the credit card is to the current activity because you're building up the balance on the credit card when you use it, you're paying it down, and you write a check to the credit card company, pay it down. Bank loan, the same way. You have principal and interest that you may be making on your payments for your bank loan for your location. The principal is on this balance sheet under a fixed asset. The interest is the only thing, that portion of it, which is really small, that appears on your profit and loss statement. So these are some technical accounting terms. I'm not going to dwell on those because they can be confusing, but I just want to give you a little bit of information. You can track activity on the owners, whether it be loans to and from the owners from the companies, or distributions to and from the owners that you'll do at the end of the year. If you're an S corporation that was mentioned earlier, besides being required to have a salary, and the IRS defines the S corporation salary as a reasonable compensation for what you do. They don't define what reasonable is for your industry. But on the tax side, we used to say you should pay yourself 60%. What you want to pay is payroll, and the rest of it you can take out of the profits of the business. Taking out of the profits is not an expense on the profit and loss statement, but the payroll is. But it's out of the same pocket in your situation if you're the sole owner, and you can actually save some money paying yourself back in distributions. And that's another issue. I don't want to dwell on that either because that's tax is not a fun area to deal with, but there are definite rules as an S corp. You have to pay yourself some payroll, credit card, payroll, liabilities, and other stuff. Exactly. And then I set up some income accounts starting here, where you might get paid for these various items. You may have medication incomes where you're charging the residents for medications or services of medication. You may have other income, which is just things like that. You hopefully don't have to give out refunds or other discounts, stuff like that, but I have it set up just in case. You have personal care income, where you may charge for different services. And think of this as a level of service that you're going to provide for that resident. Some people are at different stages of their development and their situation, where some require constant care, others are more independent, some of them are in between. So what I would suggest you consider doing is setting up a rental income account for probably one occupant in a room, or one fee for two occupants in the room, because you're going to oftentimes have what we say double occupancy in one of your rooms. You have two people in the same room, or you may have one person only in the room. Well, if you set up a base fee for the one, for the room rent, if you want to think of it that way, and then add on a service fee for the level of service they get, it can uncomplicate some things for you on standardizing your situation for your business. Because that way, okay, the rent for this room, if you're by yourself, is $1,000 for you, let's say. But if you have two people in the room, you might charge one person you might charge $1,500. But you might charge $1,000 for the individuals if two individuals do it. So you're actually going to make more money on two people renting the same room as opposed to one individual, potentially. Or you can finagle those rates any way you want to. But basically, if you have a standardized rate for the rent side, then you can have a standardized rate for the level of income that will be based on the criteria that you designate for your level of service that you give that individual. And they can cover the whole spectrum on care and cost, depending upon how dependent they are. Yeah.
So, I just want to understand that. So the level of care, I mean, the room rate would be $1,500 or $2,000, and then the level of care, like say if it's dementia, you add on another $200.
Or it can be significantly higher. And
whatever the rate is.
Because there are definitely higher levels of service. What I did, I'm going to just switch to this real quick. When I did my item list, now I realize these are made up numbers, and I know that you're not charging probably as much as these necessarily. But I said for rent, for a single room rent, I said let's charge $2,000 if one individual rents that room for himself. But if you get two people in the room, they may not be related, but they're going to still get a better deal if they only pay $1,250 each. But in total, if you have two independent people in that room, you're going to get $500 more per month for that room. And so don't necessarily charge the same total rate for that room, whether it's one occupant or two occupants, because you're losing some monies for that.
So the 12 would include the services?
No, that's strictly the cost.
Just the cost of
rate for the room. And then the level of income of the personal care levels. I set up 4 different levels. It could be $1,000 a month, $2,000 a month for level 2, $3,000 for level 3, and $4,000 for level 4 is what I used in this example just to make the point. So this person one person may pay, a single occupant may pay $2,000 rent per month for the room, and he's a high maintenance person. He may get another $2,000 or $3,000, even $4,000 in this case if he's super dependent, in addition to the rate for the room. And so that way you can standardize some things and make it easier to determine and actually have criteria that you use, like a lot of other organizations have for, okay, for this type of level of service that you're going to require, we charge this rate. But you're real high maintenance, or if these things are true, like if you're incontinent, you have to have care for that all the time, that you have to pay for that service in essence. And so consider that when you do your rate structures. But and then I had some other possibilities, like supplies. You may supply them with wipes and pens and gloves, and rubber gloves, stuff like that. So that They may provide their own, but there are times when they want to get them from you, and you may charge them for a box of the gloves or depending, stuff like that. So be prepared to charge that, or have a fee for that type of service that you're going to charge back to that client, because you shouldn't give it to them, let's put it that way. You should at least recover the cost, and usually make a little bit of money for doing it as a convenience thing for them. So keep that in mind. And then I went through all the different types of costs that you would not have. We call these cost of goods sold, and they're called that because that's an accounting term. But these are costs that would not happen if you didn't have the revenue. Your utilities and rent, stuff like that, they're going to go on regardless. They're in the expense category underneath. But you would not have the meal expenses for the residents, or you wouldn't have the nursing care, or the payroll, maybe the payroll expenses for the caregivers and stuff like that, if you didn't have residents there. So that's a category that we group called cost of goods sold that is related strictly to the revenue. In other words, you wouldn't have this expense if you didn't have the revenue. That's the way of thinking it. Because like I said, the rents and the utilities and stuff, they're going to have that expense whether you have 0 residents or a house full. So that's how I treated these. And I categorized quite a few areas, mainly the meal expenses and the medical expenses and the payroll and supplies. And then you have regular expenses of operations going on in business. And it covers a whole spectrum. And one thing I just wanted to show you, and one thing I don't like about QuickBooks initial setup, is that they just blanket everything into one category. Let's say utilities is a good example. Well, you might want to track how much you're spending for electricity versus gas versus waste and water. And I put cable TV in there. Because that way you can see fluctuations in what's happening from month to month, and all of a sudden something really spikes. Whoa, I wasn't expecting that. And sometimes they're correct and sometimes they're in error. And you want to know if something sticks out that looks odd. But if you lump all your utilities, for instance, into one total, you wouldn't necessarily know that. So what I'm encouraging you to do is when you go through and set up your QuickBooks, break out accounts that make sense to break out, like utilities or the travel expenses if you do travel, or different types of taxes, or even the telephones. You might want to break it out between your home phone, the phones for the operation itself, or you may want to do cell phones under a separate category. But you actually can charge your cell phone to the business. It's a common type of expenses they call on the tax returns, which you may share some of that expense on personal, but still, you're allowed to take a deduction for your cell phones if you're using it for business. So, might as well consider that. And you may have different professional fees and different payroll fees. Insurance may be broken down into several categories. Keeping in mind, you're a real business, and you're dealing with issues that you need to be aware of, and people are real quick to sue. You need to be sure that you're covered on your insurance, because the last thing you want to have happen is one of your residents claiming that you were irresponsible to them because you didn't do something they thought you should have done, and they're real quick to sue you. Well, your insurance policies is what will protect you if that situation comes up, because even if you get sued and they name you personally, they're suing you as either an employee or an officer of the company, and it comes under the company's insurance policy as opposed to your personal situation, your personal accounts, because you want to put up a wall between the business side and the personal side. The only way to do that is to run the business as a business. And one of the things you do not want to do is run personal expenditures through the business, because that's one real quick way of tearing down that wall if somebody works it. So just be aware of that. You can't go out and pay for the movies you went to and the other things you did and other, the kids' birthday party and stuff like that through the business checking account, because the IRS and anybody suing you will come down on you real quick. If the IRS comes in and audits you, they're going to say, hey, this isn't a real business. This is like a hobby that you're doing just for your personal side, and we're going to reclassify all these expenses as personal expenses and stuff, and guess what? You're going to be hit with tons of headaches and fines and penalties and interest. So run it as a real business. I can't overemphasize that, because it will come back to bite you if you don't. But anyhow, you can set up categories in the business side to track everything. If something were to get paid that, oops, that was actually a personal item, there are ways you can handle that, but you want to do that as an exception, not as a rule. So that's, the problem is when it's, the rule happens all the time. So, but anyhow, so you're going to set up a chart of accounts, and you can analyze what happens in your business, and I call it the management side of running your business, what you see. And it's very interesting. But anyhow, that's enough I think I'll spend on the chart of accounts. But you can, one of the first things you'll want to do is when you go to set this up is to edit, go into the edit thing at the top and edit the preferences down at the very bottom. Because in the preference section, you have a lot of areas that you can change the way, the look and feel of the software to your situation, and also the functionality. Give you an example under the accounting side. Let me first explain these two tabs. You have a company preference and you have your preferences. The company preferences are dictated by the administrator. The individual can't change one of those preferences. They're carved in stone what the company is requiring. Like you have to use account numbers or something like that. The individual, my preferences is for what you prefer. You can change the look and feel of the colors and the way that things, certain things operate, but you can't change the functionality that you have to use an account number, for instance. But under the company preferences, you know, you're going to want to check a box, at least it says require account numbers. That's what that means. You can actually set up a physical number for each of the accounts. I don't recommend that. QuickBooks is so easy to use. My name and everything, and you'll see like these names. I could precede all these names with a number, but the names are pretty good usually. This is where you, under the accounting side, you set up these class trackings, as we call it, which is where you can set up locations, if you have multiple locations. If you don't have multiple locations, don't check that box. And it'll warn you, in essence, if you forget to put one in, then you're going to save the transaction. Little things like that. You can set dates, passwords, stuff like that, or closing date from a company standpoint. That closing date password is like if I just sent off this file to the accountant for the tax return, all right, we're going to close out 2011, no more entries can go into 2011, because that's what messes up a tax return. Most CPAs and accountants, even though they love it as a revenue source, spend, about half of the clients spend a lot of time rebalancing their tax return to what they submitted because somebody went back in the prior year and made a change. And I'll tell you how easy it is. If you have in your normal business practice, you wrote a check last year, somebody either brings it to you and says, I'm not going to cash this check, or you realize, man, this thing is 8 months old, it hadn't cleared as yet, it's a stale check, I'm just going to void it out. If you void it out, you just change your tax return, because your tax return was based on that expense being in last year's P&L, or expenses. Now that you voided the check, that expense just went away, so now you have more profit than you thought you had, so now you just change your tax return. So anyhow, they'll fix it for you, but they'll usually charge you for the extra time it takes to fix it. So you want to be careful on that. You always want to have a closing date anytime you close out a tax return, that you lock out the previous year at least. You have, under bills, bills being on the payable side, you can enter bills to be paid later. Most of you probably will just write the check for when you get it in, but you can take a bill that you just got in the mail, enter it in as an expense to be, or a bill to be paid later, and you'll see the expense in the system of the QuickBooks. And then later you say, all right, I'm going to write that check, and there's a way of pulling it out and writing that check. A lot of you on the other side just hold on to the bill until it's time to pay and write the check, and you want to record it that way. That's probably the easiest way for most of you, but just to let you know, QuickBooks does accommodate if you want to enter a bill in to be paid later, so that you see the sort of plan the cash flow down the road also as to what you have to pay. So that's the advantage of that. There's some things there. You can change, like on the calendar. The company doesn't care what you do, but under the preferences, you can show how you like to see your calendars and stuff like that show up on QuickBooks. Checking accounts. You can tell what accounts to normally use for opening up your, and this is under my preferences, you can change this. Normally when I write a check, I want to take it out of this account, because this is whatever. The company has its own parameters where it says, well, I want to warn if you have a duplicate check number that you're trying to use, or if I have paychecks, I want to take them out of this payroll account instead of the other regular bank account, stuff like that. So you can change the way the thing looks, and I'm, a lot of just different things in here. But one thing I wanted to show under general, where's the general? One thing that I suggest you do check is allowing this check mark here says using pressing the enter key acts like a tab key. Think of it. It takes you to the next field. Some people like to just tab only, and then when they finish with the transaction, hit the enter key. That's what happens when you don't check that box. When you check the box, it'll just move from field to field, and there's a button that says record the entry. But this will mess you up on bank reconciliation if you don't have that check. But there are just general things. You'll get a lot of pop-ups that come up all the time, and you can turn those off in some of these general directions, these things, instructions. And I'm not going to cover a lot of these, but just go through these and look at these. One thing that is down here is, where did I hide it? Oh, they changed it. Okay. Under the tax, and this company preference, do you file 1099s? Yes, you do. A lot of them. So you want to keep that box checked, because if you do, it's going to give you the opportunity to put in a vendor file that this person is eligible for 1099. Here's their tax ID number. The system will very quickly do 1099s for you at the end of the year if you let it. So just know that. But you have to tell it that you're going to do 1099s, and also a lot of times what accounts to tag it to. But anything you can set up on mine. Is there anything I'm going to get away from this? There are lots of things in the settings, but just I encourage you to go through each of the settings and see if there's anything that you would like to change for you. Now the next thing that I want to touch on is setting up items. And I mentioned it here. These are basically categories or things that you will typically bill your residents for. Think of it that way. It makes it a lot easier in creating a bill, because you're going to say John Doe over here, I'm going to charge him room 1 rent. Now he's on certified care level 1 rent. And you can set up a time down the road. A charge for this level of care, it's going to go to a certain income account, and you can change this account number where it goes to any number of accounts. As a matter of fact, I meant to change some of these. I just noticed it. That's okay. Because I think I did at my income levels, broke down income into subcategories. But setting up these items will make it very easy to invoice each person. You can invoice everybody in your resident in a matter of 5 minutes. Send a bill out and track the payments of and everything else. And what makes it easy is setting up these parameters that you use. And you can change any of the numbers anytime. You can tell if you change it, you can say only change it from this date forward. Or it does allow you, if you really want to, go all the way back to day 1. But keep in mind, anything you billed previously is going to all of a sudden have a new total on it, and maybe a balance attached to it. Okay, so if I go back to this home screen, we're now residents or customers. Okay, so I set up some already. I have different names you'll see on here. Bill A. Smith. What I did, if you don't notice real quick, is the middle initial tells me what location they're at. I have location A, B, and C. So on the customers I set up, or the residences I set up, I have a quick reference for myself when I was doing this, that I know what location they're actually in, so they can help me bill it later to the right location. But when you set up a customer, which is a resident, by the way, these pop-ups you're going to get all the time. They'll be helpful, they'll be informative, but you're going to get tired of seeing them. When you finally get tired of seeing them, check the box that says do not display this message here. Okay? But when you go to set up a residence, you have a couple of Okay. Well, you have a name. I just set up the name Bob P. Jones. But you can have a lot of information that you can put in here that can act like a CRM we talked about earlier. Okay, because a lot of you are considering getting a contact relational manager software. Well, I will tell you that this software does a lot of what a CRM does, but not all. You can even do mailing labels if you wanted to out of the customer list if you put in their names and addresses and everything else. But you can also track information. You have 4 tabs that you'll notice. I have address info. This is the main basic information on how to contact them. Matter of fact, let me go back to, I think, one at the top. One of these I filled in, I forget now which one. But anyhow, I set up some what I call custom fields that you can see. You may have a person to contact. Excuse me. You may want to know how this customer or resident came to you. Who referred them over to you? This can be critical to find out if you're wanting to find out what marketing program of yours is working. Or you may later find out that, ooh, I'm getting my lowest paying clients or customers from this source, and my best paying clients or customers are coming from this source. So you're going to sort of shift your marketing, not dealing so much with the low source income person to the higher source income person. Only way you can do that is if you track where you get your new customers from. So I encourage you to track how you get your new customers. One thing, and I may be jumping ahead a little bit, but I'm in the right screen for this. One area that you can do that is there's a field called rep. This is often used for sales reps. But you know what? Your advertising campaign may be, or marketing campaign can be treated like a sales rep, even if you use somebody else. Like this, you could either have a client referral, you could come from this. I just use Heritage Center as a one location, or it came from the Heritage Center, which is another location, or I came off of the internet, or more specifically your website. They found you, stuff like that. Well, it's good to know how people find you, because then I'm just going to jump ahead to show you how that can happen. This is under the reports menu. I can do a sales by rep. And look at this particular case. I got this many dollars as a source from the customer referral, this many as a source from the Emory Center, and this much from the Heritage Center, and this much off the internet, and this much from the website. That's good information to know. But you aren't going to know that unless you track how you get your new sales. But this is a real way of showing how much sales come from a different source. In this particular case, I have literally data in it all through this year. And out of all this location, yes, it's a high paying. I know you may not be seeing these dollars right here, but still, when you see the big picture of where your dollars are coming from, this may tell you that, whoa, I need to stay away from this location. Let's go back to this location instead. Because look at all the money that came from that location as opposed to this location. So that can change your marketing scheme. So
guys, those are not my figures.
No, those are not your figures. I'm sorry about that. All right, but anyhow, I just wanted to show you how this relates to it. Yeah. But a lot of us, let me just say this, undersell our services, underprice our services. You look at what somebody like Sunrise Center is charging their residents. Believe me, I know both my parents were in one of those locations. You're talking well over $100,000, or right at $100,000 per year from services like that. Now, if you look at your annual rate as to what you're charging, it may be considerably less than that. And I will tell you this, you'll probably give them much better care in your center than they will get in the Sunrise Center. Hope there aren't any Sunrise people in here. But anyhow, it's just amazing what we do with our own businesses where we undersell our services and underprice them, excuse me. Because oftentimes you're in competition with a lot of people. What separates you from everyone else is the level of service that you give. And your services, when you're dealing with smaller environments such as yours, and a small home care situation, is so much more personal to that resident and so much worth more money than what a Sunrise does when they don't care, they just want to run you through and get the money from you. So consider that especially in light of the fact of the Medicaid situation on payments, stuff like that, where they're cutting out. How many of you are getting Medicaid payments now from your residents still? Okay. Well, that's eaten into a lot of income that you would have had. So now you're maybe faced with a situation, well, how do I supplement that income? Do I raise the rates on my resident? Oh, he's not going to pay that. Or I've had this resident for so long that, any number of reasons why you may not be able to do that. So you're sort of backed into a corner to this point. So what do I do? Because if I can't really kick them in the office out of the place onto the streets necessarily, because at this point you built up huge relationships with people too. So you've got to have a safety net for things like that happen, and one of the ways you have that is to properly price out your services for what you do. And I can promise you, if you're going after the super low payments for all of your clients, then you're going to be struggling to pay all the bills and pay yourself. Where you need to get a mix that's comfortable for you, and I realize you want to deal with certain groups of people as a service for them, and that's where you're going after the grants for to help supplement your incomes and stuff like that. But you also are running a business that you're in the business also to make some money for yourselves. So you have to find that right blend of how much of this category and that category you want, but you want to, at least on the higher paid categories that you go after with different people, go after a fairly reasonable rate for yourself. They will help pay you or offset surprises on the other end where, okay, we can't pay for Medicaid anymore, stuff like that, or at least whatever. Because you still have bills to pay, and you're depending upon the income to pay those bills. So find that right mix, but so often, all companies are like this. They underprice their business based on going rates. I had a big battle with my own CPA partner. He was wanting to charge about half the rates on tax returns than what everybody else was charging. Finally, it sunk home, and we thought about selling off that side of the business, and prospective buyers turned us down because our billing rates were too low compared to everybody else. So something to consider down the road for you. Okay, vendors. Let's go on to them. Vendors are the people that you pay, and you have lots of people that you will be paying. And now when you go to set up a new person, QuickBooks wants to know: is this a customer? Is this a vendor? Is this an other? Other is almost never used, I'll tell you now. If you're paying an individual, it's either an employee or a vendor. And it's only an employee if you're taking out payroll taxes. Other might be something like a service charge you get from a bank or something like that. You can treat it either way, but it should only be a few things. But you set up the main information on the person. Again, you can set up custom areas, additional information. In this case, this is a service provider. He's due for, the terms are due on receipt. Then let me go back to another one over here. Let's find a service provider that is this person here, let's say. They might be eligible for a tax return, or 1099. They may be an independent contractor. So here's where on this vendor setup screen, when you set them up, you can get their tax ID number and check the fact that they are eligible to get a 1099. And then at the end of the year, it's just a simple process to print 1099s for all the people that you did. One thing I would suggest, look at your people that you're paying. If they are an individual, or even if they have a company name, if they do not have Inc. at the tail end of the name, then you probably have to send them a 1099. LLCs are not corporations by default, so unless they're taxed as a corporation, which is an option. But you would have to send an LLC a 1099 at the end of the year. You'd have to send an individual a 1099 at the end of the year if you pay them $600 or more cumulative in the course of that year. Doesn't matter if it was $1,010 payments. If it adds up to $600 or more by the time it's year end, then you have to send them a 1099. And I would highly and strongly suggest the very first time you pay an individual, and you realize they're an individual that would probably get a 1099, have them fill out what's called a W-9 form. That is your tax information you will need to send them a 1099. Because I can't tell you all the clients we've had that are disturbed at the end of the year, like the brick mason I had, that had huge turnover in his business. Well, all these people he had at the beginning of the year are now long gone, and they were the ones that, and he treated them as independent contractors, and they didn't fill out the tax information form, the W-9. So now he has all these 1099s he should have done, but he doesn't have the information to do it. So I suggest you trade off on that first check with a W-9 form in order before you even give it to him, because that protects you. And if you don't have that, IRS will not allow that as a deduction if they don't have, or they'll treat them as an employee, is what they'll do. And they will charge you all the employee taxes and employer taxes back to you. And plus the penalties and their interest for not filling out forms on them. So trust me, you don't want to go that road, but if you don't down that route, you can help it. So if it's an individual, keep a stack of W-9s on hand with you. You can give it to them, say, all right, before I give you your check, you have to give me this back. It tells me, because that's your authorization, either to tax them or not tax them. And if you don't have that one form, it can kill you. So just know that. Again, people you pay. I'm going to show you one thing on the go back. I'm going to go back to the customer screen. Let's see here. Go back. And one other thing you can do with these customer screens. Let's just say I have a customer here that I pick names out of random. A lot of people don't notice there's a notes button up here. Well, it may be that you can record, you can use that to record information about a particular resident. Like this one here, he had an issue with his funding in October, payment will be made around the 14th, 15th. Or this person has a DNR in place. You know, just information for you to keep on each resident that you have. It's specific to them, you can date stamp it as to when you put it in, and it's a really neat thing to track. You can even set up to-dos, to-do lists for these people. Things you need to do for this customer. Oh, I need to get this medication for this person, he's about to run out or something. And it'll be very easy to set up. And so it's just another way that you can use this software as somewhat of a CRM. But also, more important, this really gives you some good information specific to that resident that you can track. And even in the custom fields that I have set up, you can track, you can set these custom fields, you can define what you want to have. And you can say, all right, I want to see these items on the customer screen, these items on the vendor screen, and whatever items on the customer or employee screens. But you can track their birthdays, something to help you keep track of when they, do something special maybe for them, or if they have a DNR in place, or emergency contact information. So if you need to know that, you can track all that right there within the software. All of this type of stuff you can't do if you try to do this manually, at least very easily. Yeah.
I guess you'll be notified, the software itself will notify you on, say for example, it's a birthday that's coming up, maybe you'll get an email sent to you.
Not necessarily, but you do get what is called reminders.
Oh, okay.
If I go to account screen, may change these in all the different versions, but when you first start the program up, you'll get reminders. And matter of fact, they changed it so much, sorry about that. But anyhow, there's lots of information you get back later on that. But that you can run reports also on who's having a birthday coming up in this month, stuff like that. So there are other ways around. The good thing about this software, there's also usually at least 2, maybe even 3 different ways of doing the same thing. And so it really makes it sort of nice on that thing. Because like, for instance, if I'm going to write a check to somebody, and I want to write it to John Smith, okay. I have Smith in there, so I'm going to say Smith or whatever. And I go to Tip Tappy, oh, this person isn't in there. You want to set them up? Yeah, that sounds good. I can either just add his name only, or I can actually set them up with all the other information. So the software makes things very easy to use. And so you can do changes, as they say, on the fly, which a lot of other softwares don't allow that. But some places insist you set it up first before you can do any activity with that customer. This one lets you do that, so I could have set him up if I wanted to. So, let's see here, that screen, I do not want to record it. But, so that's it. Okay, the classes are very easy to set up, where you basically, there's under the list menu, there's a thing for class list, and you can easily add a new class if I wanted to. I set up 3 classes, or locations if you want to think of that, location A, B, and C. Simple. And now, all I have to do is when I have a new transaction, if I want to write a check, you'll notice I have a field for class, and it gives me those locations. All I have to do is to tag that location to either income coming in or expense going out. And if I do that, then I can later run reports that is, say, profit and loss on the company financial. I can run a profit and loss report. Whoops, I didn't stand. I didn't do that. I can run a profit and loss by class. And now, I'm going to collapse that down so I can see by location. This is how much income I have for this location, expenses, and this is the profit or loss if it's negative. This for this location, so much income, so much expenses, that's the profit, that's the profit. And then it gives you a combination, grand total. And also I can later, in any of the reports that I do, I can customize the report. And I can say, well, let me just see under class, oops, class, I can see, here goes, class. There we go. I only want to see location A. What happened here? Okay. So now you have your report just on location A. Or I can say multiple locations, just give me A and B. But it's, a lot of these reports that you can run now, after you get all this data in, can be good management information for you to see what's going on in a particular location. I'm going to go back to this customize and change this filter back to class. I'm going to just say all classes again. And it goes right back to the other forms. But you can do this on a lot of the different reports. You can really isolate what you want to do. You can isolate it down to one individual if you want to, one resident, any number of things. So it's really neat what you can do after you get the data in if you use a software like this. You cannot do this if you're doing a lot of manual bookkeeping or using an Excel spreadsheet or a lot of the other softwares. And that's what I wanted to show you is the power of this software if you go to use it for what you're doing. And you can isolate issues. I'll give you an example. Medical, let's find something that seems a little, well, this doesn't matter. I can just pick a category. You'll notice I double-clicked on that number and it broke it out into more detail. Oh, well, what goes on this one? I can double-click that number. I can drill all the way down to the actual entry that caused that data to appear in that report. Or I can say, all right, I charge this to location B, this is what it was for, or this is who it was to. And so this is one of the nice things also about the software, the way it interfaces with what you're trying to do to give you that management report. So anytime you see this pointer change from a point or an arrow type thing to a different thing like it just did, that means you can drill down and double click on that item and it will take you into further detail. And this on a lot of the reports that you get to, you'll see that. And even if I wanted to, oh, I don't need this, I don't need to care about this column here, you can even change the way it looks quickly and easily by modifying stuff. I don't know how to do it. But anyhow, there's just a lot of fun stuff you can do with this software if you let it work for you. And a lot of people just use it to enter the data and give it to their CPA for tax time. They don't use it to actually run the business. And that's what you need to do. That's where your forte is in running the business. Is in running the business, and you need to know what's going on within your business. And what better way than if you can manipulate the data in any number of ways. To give you an example, on this report, I can do sales by, remember we set up those items? This shows me for this time period, whatever time period you specify, you have 9 people at this care level that you charge an average rate of $1,000. Or you have in care level 2, 5 people in this time period, average rate of $2,000. 7 people had this service, 1 person in that service. You had 10 people in charge for single room occupancy, and 4 people in double room occupancy. And also these number of gloves and other things. It tells you exactly what you pay as an overall on an average. So again, it's all about getting the data back out, what you put into it. And that can only be done if you use a software like this. This software Pro version, $399 for the Premier version. So $229 roughly, or $230. Changed a little bit on pricing, but not much. It's under $250 probably. But you just get so much back.
So would they purchase it from you? Would they purchase it and just go on?
Your cheapest price is probably just going to Costco or Sam's.
Yeah,
Okay.
sometimes they have no.
Yeah, I can sell it to you, but then have it shipped to you, mail it to you. And my price, I compared them actually, and my pricing, I do get a discount on purchasing them, but my price is almost identical to what it is at Sam's and Costco. So, you know, cut out the middle person, just go straight through and get it for the same price I would anyhow from those sources. Now, if you want to buy it from Staples or Office Depot, yes, I'll save you some money on that. But if you can get it, if you have a discount membership at one of those places, just go ahead and buy it there. You'll notice some of the discount places only have one version, and not both. Like I think Sam's may have both of them, but Costco may only have the low version, the Pro. But other than that, pricings are almost the same at both those locations.
And this one, is this a Pro or?
Well, this is actually a Premier Accounts Edition, but everything I'm showing you right now, you can do on the Pro. Okay? So, unfortunately, I have versions going back to, I have 15 years of versions. Go that way. So it's amazing.
How long is the life on it? I mean, every year they come out with a new one, so.
Good point. Just because they upgrade the software doesn't mean you need to go out and buy that new version. Look at what changed from one version to the next and see if those new changes are something that you would like to have and are willing to pay the upgrade price to get. Otherwise, you can use, if you're not doing payroll internally in QuickBooks, you can, I have many clients that stayed on that version for 10 years. But if you're using payroll through QuickBooks, they make you upgrade every 3 or 4 years because they just don't want to, there's a lot of work going into the payroll process. They don't want to spend it on the older versions, plus that's their way of getting more money from getting the upgrade. But just because they upgrade, that's a good point. You don't have to upgrade your software. In your situations, I guarantee it'll probably be good for at least 2, 3, or 4 years. So, something. All right. Let me just go back. I want to hit some other main highlights because I want to get you out of here in recent time too. In QuickBooks, one thing that you need to be sure to do is follow the flow. This is what's called the home screen. And that's the main one that you want to come back to all the time when you first start off. You may or may not have this information showing here on the side, but this is a quick way of flipping back and forth from one report that you've opened up to another, that you can get rid of it so you have more screen space, or you can, under the view screen, say, show me that open window list again. But on the home screen, if you do enter a bill in to be paid later, you need to be sure to pay it this way. Because if you don't, you're going to have a mismatch. That's the only quirky things about QuickBooks. You have to follow the flow. If you enter an invoice in to be paid later, then you want to receive the payments for that invoice. And I'll give you an example how this happens. I want to receive a payment from that John Hopkins still owes me some money. And I have an opportunity now here, I can say, all right, well, he's not going to pay me the Medicaid number. He's going to pay me, $2,400 instead of him, because Medicaid is hopefully going to pay his bill. So he's going to give me a check for $2,100. And actually, I want to show you something before I do this. I'm going to come back to this. I'm going to come back to this. One of the reports you're going to run is under customer receivables, who owes you money? And this is where it stuck out right here. It's, oh, I haven't gotten paid by this John Hopkins guys yet. And these guys are all 700 on the rest. And I set those separately. I said, well, Medicaid isn't going to pay until the 20th of the month. I just use that as an arbitrary date so that I can separate what was paid, those people that are getting Medicaid payments, so I can see that, all right, I haven't gotten those payments from these people yet. But this guy, oh, he got to pay his rent. And I can drill down on the rent and say, all right, well, I billed for these services. Room, single occupancy room for $2,000. He uses a level 1 care for $1,000. And he has some medication services for that month. So he owes us $3,100 for that month based on the way I billed him. So, okay. So now I want to go back and receive the payment on that, because this guy just did pay me. Or he had a problem with his funds. I had him on the note screen earlier on funding, and he said he was going to have payments coming in right about that. So we're going to go back to his screen, and all right, he's going to be able to now pay that $2,100. Right? Oh, sorry. Okay, so when I said, whoops, $2,400, sorry. You'll notice that when I go to make that payment, the QuickBooks will say, well, he's still $700 short from what he owes. So another little flag. Well, that's okay, because this is Medicaid is going to pick that up, supposedly. You know, so I say leave that as an underpayment. Go ahead and apply this check, which, by the way, his check number, whatever it is, I encourage you to fill in their check numbers that they pay for. You can even make a memo if you wanted to, that it's whatever month it's paying. But now I can apply that payment to them, and it says, and you get another screen that I want to show you too. You will get this pop up every time you change something on a report. When you get tired of seeing that pop up, click the box and say, don't ask me again. If it's a report that says a report needs to be changed to reflect the new information, yeah, I always want to see that anyhow. So I say, don't ask me again, and yes, update the report with the new information. Now he only owes $700 on this report. The other pop-up you're going to get is, oh, do you want to memorize this report when I exit? Which means I can come back to the same report later. There are a lot of times you want to do that, but not every single time you see a report. So when I get tired of seeing that, I always say no, don't ask me again, and no. Because if I ever want to memorize a report, guess what? There's a button up here to let you do that. So why don't I want to be asked to do that? So but this is some of the power. You can see how easy it was to record the payment after I invoice that person. Yes, ma'am.
Hey, can we take a 5-minute break?
Good idea. We were talking about doing that right about now. Let's take 5 or 10 minutes.
Yeah, that'd be great.
Quick break, and we'll start over in just a few minutes. Give you a chance to hit the restrooms if you need to. And my goal is to have you out at, let's start right at 2 o'clock, which is about 8 minutes. And we're going to finish by 2:30 or 3, 4 and 3. Whatever, I want to try to get out of it. I know, I don't want a lot of you.
Your home and your businesses, please fill this out.
Work out of time.
Just pass it around.
Before you can.
All right, thank you. I want to show you another reason you want to get the software. Again, I talked about billing your residents each month. You can set up what's called Memorize Transactions. And that can be billing things, it could be invoices for checks that you need to do, it could be any number of things. But I want to give you an example on billing your residents. After I set up a template, I can just double click and say, all right, I want to bill this to the person. Now, granted, I might have to change some names. It's really easy to change these. It pulls it up. You can do your same word processing commands you use on Word and stuff like that. Where you can do Control-C to copy and Control-V to paste and stuff like that. I'm not going to change it for right now just because of the time, so I'd have to go in there and type it in. But it's really very easy to change that to October or whatever you want to call it. Or I say, oh, I don't have, he had 2 of these this time. Okay, so I have 2. put that in, boom, it instantly changed it. Or it could even be that you change this person again to go up to level, the second level. There's a lot more maintenance now. I want to go ahead and change this, and I say, would you like to edit only the item and customize? Okay. I want to change the description also. Now he's on tier level 2. Oops. Yeah, tier level 2. I didn't change the description. Sorry. Change it to 3. Okay, so now I changed the description. He's on tier level 3 for this level. And it automatically changed his billing information. So now I could quickly, in a matter of literally less than a minute, bill that client for the next months. And now he's sitting out there in receivable showing he owes money, and I'll later go in and collect the money and stuff like that. So, but it's very easy to modify as you go forward. And when I talked about the flow that you have to be sure to have, I created that invoice just now, initially here. And I can back up and look at the ones I just did, just by hitting the backspace key. There it is. And I can modify it yet again if I wanted to. But the main thing I want to show you is you start in this flow. I created the invoice there. I'm going to receive the payments here. We actually received that payment on that last client earlier. Now, I want to record the deposit going to the bank. And I do have some of them out there waiting to go to the bank. And you can group them by the categories. Like usually, this is what you want to do on this category when I'm grouping stuff to go to the bank, is what the bank statement will reflect. You may have 5 checks to take to the bank today. Well, you're going to enter in all 5 checks on one deposit slip and have a total for those 5 checks. And that's what would happen if I were to do this. I were to say, take all the A's are going to the A account for this date. Let's say those guys. So now, I have those 4 people going to the bank, and what you can't see, for some reason, is off the screen, it has a deposit total over here, which weird. For some reason it's not showing like it should normally, but anyhow, the total of all those amounts are off the screen, and for some reason they're not showing. I don't know how to show it. Give me a second. Sometimes it has the W had a bar. It's sort of weird, but anyhow, this part of this screen that I have on mine. Oops, that's I'm going to record that transaction, so now the bank will have the total of that one, or the register will just have the total of those 3 checks, just like the bank's going to reflect when you get the bank statement. Because one thing you will find, it's also very easy to do, is if when I'm in a bank account, let's go up to this operating account. It's very, how many of you spend hours reconciling your bank statement when it comes in?
See, I cheat. When you just did, I cheat. I go in maybe twice a week.
Okay.
And I download.
Yes, you can download your transactions from the bank or credit card
to this, and then I do.
Okay, and that helps. It'll show a little lightning bolt type thing indicating that you downloaded it from the bank, and it makes it so much easier to reconcile.
Much easier than what you just did.
But what happens now? I'll go to this bank and say, let's reconcile. Well, now the bank statement says I have an ending balance of, this is right off the bank statement, that much money. Okay. The previous bank statement, had I reconciled it, like the next month would have this as a beginning balance, and then I enter in the new bank balance. Didn't have any service charges, didn't have any interest income on this one. So now I go on to the next screen. Yes, I know it's older. And I have all these transactions. However, the trick on QuickBooks is I don't want to see all the whole year's worth of transactions because I'm just starting to do this. I just want to see the transactions relating to January. Click that button, and now all I see are the January numbers. If you're doing what you just said, I could also do another little feature and say, everything should be accounted for. I can mark all.
Mark the unmarked, yeah.
And guess what? You'll go through there and mark all those, and I'm in balance. How would it, I could have reconciled this bank statement in 1 minute doing it like that. But let's say I didn't have them all marked off. Go back to what I had. What you do is you take your bank statement, and you just look at your bank statement, you look at your QuickBooks, all right, I see that one on the bank statement, I see that one, I see that one, I see that one, I see that one, that one. And you do the same thing on the checks. You literally just go right on down the line, check them off. The idea is when you finish checking off everything on the bank statement, which that process only takes about 5 minutes, you should still be in balance. And when you're in balance, you say, all right, reconcile. And it'll reconcile, okay, I can go, these are again little informational things you can turn off later when you're tired of seeing them. The only thing I suggest you do is to print out a report for your records that goes in your file with the bank statement. So, all right, I want to print out both of them, but right now I'm just going to display it. And what that shows me is, all right, here's a summary of the reconciliation, and the other report shows detail, but I just cleared it. That backs up your bank statements. And it's great information to give your CPA later on if they need it, when they show that everything's been reconciled properly. This shows you there's no reason why you should never balance. Let's put it that way. If there's a transaction on the bank that you didn't record, just record the transaction and then go back to the reconciling feature and you're done. But again, this takes a lot of time out of reconciling the bank statement each month. Now that I've reconciled, you'll see these heavy check marks by those items. And the key just to remember is never modify or change those items or take away those check marks, which I technically could do by check on that, because that'll mess up the next bank statement. But when it's been reconciled, there shouldn't be any reason to change it, because that's what cleared the bank. So you could technically modify the account it went to, as long as you don't change the dollars on the check. Okay, but that's an easy thing to reconcile now that we have all this data into the bank. So that itself saves you a lot of time. But you can download your transactions. How many of you do have credit cards for your business? I'm not talking about debit cards. Those you can just treat like a check. But actual credit card accounts for business. Anybody? And I'm not going to worry about that right now.
But if you had to use so you bought something for the business and on credit card.
Debit card, you mean?
No,
or
credit
credit card.
So
Okay.
I bought something at office that's not related to the business. I could still put it in?
Sure. There's a button right here that says enter credit card charges.
Personal credit card.
No. Okay. That's a good point.
So we
Thank
That's my question.
Then you do an expense report that say, all right, I have these out-of-pocket things I paid for the business out of my own personal account. So you do what's called an expense report and itemize all those things. And don't forget to include your mileage to get reimbursed for that. You realize you can get paid, I think the rate right now is 52 cents a mile for any mileage you put on your personal vehicles that relate to business activity. Includes going to the bank, includes going to meetings like this. But that on the expense report, 75 miles this week or a month or whatever it is at 52 cents a mile, it's almost 50 cents, it's a little more than 50 cents on the dollar.
Yeah, they just raised it.
Yeah. And most of you, I looked at my business, I was easily putting 10,000 miles a year on my personal car for business purposes. That's a $5,000 or $5,200 deduction I can claim for business. So you're just giving the money, the IRS money, if you don't claim it. So do an expense report, say, all right, I had so much out of the personal credit card account for these items, and they would have gone to stationery supplies or office supplies, I mean, if I had booked the property of the business, or mileage expenses, that goes to my mileage or travel expense account. So then the company would come and, forget this one, let me go back to the other one. Then they would actually write you a check and say, I paid the order of you, and these are the items on your expense report. You know, I had mileage, it'll go to the mileage reimbursement account for X number of dollars, and I had office supplies, it goes to the office supply account, wherever it is, under their office, somewhere up there. And you'd itemize all the things on your expense report, write yourself a check, and now you've transferred that expense to the business. Wow.
Now, all this stuff here is loaded already, or you have to do?
No, this
No,
is
he
not.
custom,
But I'll,
No, I mean like office supplies, those, are those some of them?
some of them are, some of them are.
And you
Again,
just itemize
they may
it.
not be subdivided like the utilities weren't. There was just a line item for utilities.
Gotcha.
But anyhow, it's easy to customize, and you can customize it and change them after the fact, after you've done stuff.
But as you go to put your information in, if you had an office supply
Sure.
expense,
You'll be presented with a listing of
Just
the
like
chart
you
of
did
accounts
before,
when you
yeah.
install it. You can add to it after you take the initial thing they give you, and easily modify it. But you can see how easy that was technically to write yourself a check and then transfer that, all those personal money you spent on the business into the business account. Because you want that in there come tax time, because you want to can for the business that's legitimate. So, but this was a very easy thing to do.
Wow.
Uh-huh.
I think you had touched on business credit cards earlier. But
Yeah, I'm gonna go right, that's going right back to that now. I will go back to that. Do I want to record it now? No, because I don't have any information. If I had a business credit card, there's a button here to enter credit card charges. And there is a credit card, I have entered a couple of them in here just as an example. By the way, if you ever have on the chart of account, you notice how I have the parent account, like I had utilities as a parent account, and I had siblings, like the electricity, gas, water, and stuff. Never post to a parent account. Post it to the sibling. Okay, this went on this specific credit card, which may have been American Express. The other one was Visa, somebody else. So you want to generate the right thing, use the right credit card. I mean. But I purchased this from, I'll just pick, doesn't matter. I'm just going to pick a vendor, some vendor, I don't care, this is not right, obviously. But anyhow, I bought these supplies from this vendor, X number there, X number there, X number there, and X number there. And I'm gonna put something in there, let's say $200. So it'll actually fill in the amount for me up here. And so now I have just charged $200. I have the slip in my hand for the credit card receipt. Bought it from this vendor here, whoever it is, this could be Office Depot or whoever. And I save that information. Oh, wow. I didn't charge it to a class. Oh, I need to change that. This is actually belongs to this location. So it'll tell you when you forgot to do something. And you can go into more detail. I do encourage you to try to fill in the memo field, because you may not realize, you know now why you bought that $200 where you did. But next year, when you go back to, what did I buy this? What did I pay this person $200 for? It's really helpful to detail, or at least put a little explanation of what you spent it on. So that the way you do that is in the memo field, and then it'll reflect on your statements. So now okay, I didn't have anything on these guys. I just.
It's user friendly.
It's very user friendly.
Yeah.
So now what happens is, first of all, if I go to the chart of accounts, to my credit card accounts, wherever they are up here somewhere.
in the middle, you know, we put.
Oh, yeah, hit it. Okay. You'll see I have, if I look at the register, I now have a $200 charge on the credit card register. And this act works just like a bank. When I get the bank the credit card statement in, I can reconcile it just like I reconcile the credit card accounts. But anyhow, I have $200 now on the credit card account. One thing I ask you not to do is to take a statement and post from the statement, because what happens, that's okay, breaking down the statement by the accounts for what you charge on it, if you pay the statement off in full each time. Most people end up at some time or another, if I don't have enough cash to pay it off in full, I'll pay $500 towards that $3,000 balance. And then you're messed up. What I want you to do is to go on the home screen, you'll see enter each credit card separately for what you purchased. That builds up the balance in the credit card account. So when you go to pay the credit card company, you just charge it to the credit card account, and it reduces that balance. And it keeps a running balance that's proper that you can reconcile to. But don't post from the actual credit card statement, because the other reason you don't want to do that, there's so much credit card fraud out there now that you're going to get a lot. I have seen tons of times, personally even on our credit card accounts, where people have tried to charge stuff to your personal account, because they hear so often people have zapped into somebody's system and stole credit card information. And they'll never usually charge more than $100. And they always try to keep it under $100 because a lot of people say, $87 from XYZ supply company? I don't remember that, but I guess it's okay, and you allow it. But you just paid the fraud people $87 that you won't get back. But if you enter in your charges when you incur them, and then you get the credit card statement, you reconcile and match them up, all right, this one matches up, just like the bank statement did, and everything's good. And when it all balances out, oh, this one I don't have checked off. Where'd that thing come from? You'll focus in on what could be a fraudulent charge. But there is a ton of fraud out there right now, so I encourage you to look at each item on your credit card statements and reconcile them separately, just like the bank statement. But enter them in, just like I did here on the credit card statement, or credit card charge thing. That will increase the balance in the credit card account, and then later you get the bill from the credit card company, you can pay them for the whatever you're going to pay them, and charges to that credit card account and reduces the balance. Did that sort of answer what you're getting out on that? Don't
So
forget to
this
pay
would be a credit card, that's
Business.
the
business credit card, right? Not the personal one. This is a business credit card. That's why I went back
That's
to
taken
this.
out in the business name.
Yeah, at some point or another, you're going to deal with potentially a business credit card account. So I just wanted to show you that anyhow. You may also have more likely, a business debit card that works like a credit card.
Right.
Well, in this screen, you can just still go into the right check screen, and instead of a check number, you can just change that to debit. And then say, make sure it comes out of the right account, and you bought X number of things from that vendor.
Okay, okay.
And just like anything, it'll put the charge, on the bank that it shows
It
coming
won't
out of the
print a
bank.
check or anything, it would just keep.
No, but it could,
But it says debit, so you don't know.
this is debit, yeah, I would say change whatever it'll pick up the last check number you used
Right.
if you have this unchecked. By the way, you can print checks physically from your computer if you have check stock, as they call it, that has your routing number and check numbers on it already. So you can physically put a bill in to be paid later, or even one of these, you can say to print, and that'll allow you to physically print the check on your printer. if you
Yeah, I
wanted
have Bank of America check that supports.
Yeah.
So.
Sure. But anyhow, otherwise, debit entry, you just write, I usually write debit, DBT or something like that, to let me know that this is on my debit card, and that's the way it'll show as a check number later on.
So you can override the check number.
Yeah. And, but usually it'll track the payments. You can do an online payment. You can say, I want to pay this online. A lot of you have that online banking that allows you to do that, so you can do that also this way. But lots of neat things you can do. So just keep that in mind. Because eventually when you go to one report that you might be interested in, once you get everything in under banking, is missing checks. Because at some point in time, when you look at your bank, you want to make sure all the checks are accounted for. You'll see debits also, and you'll see checks, but you may see duplicate check number, or you may see skip check number, little stars, just like the bank does on their statements. Usually that's okay, but usually the skip check is if you have a voided check that you tore up or didn't use or whatever reason. I would still enter it in the QuickBooks software as with the check number, just use the vendor as void, or something like that, $0. That way it accounts for the check, so you're always accounting for all the check numbers.
What if you have different officers that have different checkbooks?
That's okay. That's okay, because it'll be a different series, but within their series, they should be accounting for all, they should be sequential check numbers and nothing skipped or missing.
So it does, does it balance, of course it's coming out of one account, so does it balance?
Where you have to be careful of is when I ask for the check number, that you use their number for the recording the check. Because it's going to remember the last check that was typed in, and it could have been off the other guy's checkbook, and maybe his number instead of the other guy's number.
They shouldn't have the same numbers.
Well, they should, if they have two different pads of check, when he has one pad and he has another pad, they will be two different numbers. So in other words, if this guy wrote the last check number, when you go to key it in, that was keyed in the checkbook.
Say my series is 1 through 200.
Right.
And then his or her series should be 201
Correct.
through, okay.
So that's fine. So the last one you entered into QuickBooks was your series, 1 through 200. So you have check number 155 that you just entered in. Well, now you have a check from him that you're going to enter in. It's going to think 156 is the next number. He said, no, we're starting with his now. His is this number. So that's the only gotcha that could be.
And they would support 2 different bank accounts.
No,
Or not necessarily. Yeah, so that's, in that situation, you just have to be conscious as to the check numbers that you're recording to make sure it doesn't start off with the wrong check number.
but in that account, when we set up that account, it's gonna be one amount.
Yeah. Yeah, so it works on that, so. But anyhow, let's see here.
No, excuse me, Bob.
Huh?
Which brings me to a question. Like, for example, we have with Fifth Third, we have a payroll account, which has to be set up separately and an operating account.
Sure.
How would that work with QuickBook in terms?
Not a problem. You'll notice when you go to write checks, one of the things up here is which account are you going to pull this out of?
Okay, okay.
So you just be sure if you're writing a payroll check, you choose the payroll check account that you've set up.
It thinks of everything, huh?
Yeah, it does. It makes it very easy. And it is very easy to fix if you miss something, too. So that's another nice thing about this software. But this software is still, you've only seen just a fraction of the things. I'll just give you an example of some of the little things they don't publish. I'm working in a date field. I can actually increase or decrease that amount just by hitting the plus key or the minus key. It'll increment it by 1 digit. Whoops, something over there. No. But anyhow, that's another thing it does. Or I can, if I want to enter the date, I can just enter 101012, and it'll, without the slashes, it'll know this come tax time. And guess what? When they make their changes, like they may add depreciation expenses and other stuff that you don't even know or want to know about probably, and but they'll make those changes that they need to do the tax returns. They'll send you a file back that will update your QuickBooks for their changes. So now you're back in balance with what they did. And so it's really neat, and it gives them a much better tool to work with than manual sheets for doing the tax return. You'll save dollars on the tax return because you'll probably cut their time down to a fraction from what they had been spending. So you'll more than pay for the software on the back end through both your time you will save in doing day-to-day tasks you've been doing manually, or the cost of doing your tax returns. The whole game is you're as business owners, you want to spend your time on the things that make you the most money and make the most bang for the buck. Once you do get it, I'm not going to go into a lot of the reports, but there's a wealth of management reports in here. I showed you several of them already that you can get that can help you run your business, like the sales by sales rep being used for marketing campaigns, sales by item summaries. But if you go through all of these menus for reports, you're going to get a lot of things. One thing I do want to show you quickly on the financial reports, if you haven't learned how to look at a financial statement and know what it means, you need to learn it, because you need to know that those negatives at the bottom line, net income, if they were there, are not good, because that means you lost money. And then you want to know where and why did I lose money? And you want to be able to isolate any problems that you have so that you can fix them if they're fixable. If you're bleeding from a cash flow standpoint, you want to try to find out if you're bleeding from a vein over here or artery over here. You want to find that artery that's causing your cash flow drain. And it'll show you very easily if you're in the right reports within QuickBooks. Like one thing I'll show you is cash statement of cash flows. I can run it for a period of time. It shows me exactly where the money went in different categories. And that's a tool for you as an owner to run your business. And you can set up budgets as a tool and run comparisons of the actual results versus what you budgeted for that time period. And say, oh, we way overspent our budget in this category. And if you have certain people responsible for controlling the spending in that category, then you can go back to that person and say, well, why did you spend so much money on this category when our budget called for this? And they hopefully better have a darn good reason as to why they exceeded the budget, you know, if you're running tight. So it'll really highlight highlight areas to look at in the business. Also, if I only had one financial report in my business, I would want what's called the balance sheet. Because that tells me at a glance everything I need to know about the company. How much money I have in the bank accounts, how much money is owed me by customers, for how much funds I have waiting to go to the bank in this case, because somebody's sitting on it in a drawer, hadn't taken it to the bank as yet. Or how much is owed on payroll taxes, or how much is contributed by the owners on the business, and even in the profitability of the company over time, both in the current year and the previous year. So,
Another question, and you might have answered it previously, but, okay, so in the situation where you have multiple accounts, like I mentioned, when you're doing your reconciliation and, different reports, it recognizes, does it merge at that point?
it's looking specifically at that account when you're reconciling.
Okay.
So if you're reconciling a bank account, it wants to know, are you reconciling the payroll bank account, or are you reconciling the general operating account,
Okay.
or the savings account?
So you would have to have two separate reports?
Well, you'll generate two separate reports, but you're going to have what you're looking at is your bank statement. And in QuickBooks, you're getting ready to reconcile some bank statements, so all QuickBooks needs to know is what account do you want to reconcile, and you go into that account.
But what if you need to know the balance sheet for the company as a whole, not necessarily just separate bank accounts?
Sure, and this statement here is what tells you that,
Right.
Okay.
very quickly. Because if all you're looking at is balances, you're not reconciling, this tells you at a
It
glance.
gives you the various accounts.
Yeah, and it broke it down, like here's location A,
So like in-
operating B.
Okay, good. That's
In the beginning, you had said that, for instance, she said to refer to several, more than one personal care or home like that. So in the beginning, you had said if you have more than one personal care, it's good to have different account rather than one account.
It can be, it's both ways. If it's one owner, one ownership, where it comes into muddy waters, if you have different partners involved or owners, if you want to think of it that way, and this person bought in basically because he was going to run this location, then that would be a good reason to isolate that location of the bank account and everything total.
But I think what she's asking and what I'm trying to understand is that, so if she has one location, let's say here in Atlanta, and then another one in Gwinnett somewhere,
Yeah.
and then when she's doing her QuickBook now, and she wants to get the balance sheet for both of those businesses.
Okay? Actually, this is new to this year. You can actually do a balance sheet by class.
Okay.
Because and this is actually new last year. They aren't,
Wouldn't you have to have different accounts though? It would kind of jumble up a little bit more because you're not classifying the different homes, but you're not classifying the business account.
right.
Okay.
But I actually can do a balance sheet by location.
Location.
Right,
Okay.
but the money actually will be all in one though.
It could be. So that's the thing that you need to, yes, it could be just one bank account that you separated by telling it each location that is affected.
So, because if I'm trying to find out which location is draining me versus, one for the
Exactly.
other. right?
Exactly. That's where you especially look at the profit and loss by class, because that's going to show you what's losing the money.
Right.
And then the only other thing that would affect it that's not on the profit and loss would be if they're spending money on credit card payments or loan payments that are not reflected on the P&L, but you have to know that on that company. Those are usually preset monthly expenditures, and a lot of them at least, but the big thing that drains you is the profit and loss statement that you would have by class. So that one report, company financial report, profit and loss by class, is critical, because then you can see, oh, this guy's losing money, this guy's making money, and then you can figure out why he's losing money compared to everyone else. So, but again, it's management tools to help you run and analyze that situation. There's a lot of companies I've gone into say, well, we made $1 million of revenue last year, but we only have $10,000 in the bank. I want to know where it went. What
I
happened?
have
Why?
one final question. I
Sure.
mean, a lot of us here are setting up our new business,
Uh-huh.
okay? And I guess we're gonna put money into this business, which we have. So I think there's a place on our balance sheet there.
There is,
that-
it's equity.
that talks about equity. So when we go
Capital stock.
to gather all the money that we have spent on our business, right? We can go through here and put it into QuickBooks.
Oh, yeah, because your initial,
Okay,
absolutely.
That's our initial setup.
Absolutely.
Yes, and it will go in that
Yeah,
category.
it may use an account that they initially call opening balance equity,
Yes.
but what your accountant or you need to do after that is to take that number that's in there and split it out. Like, there may have been $45,000 in the opening balance equity account. And they said, no, that's really $15,000 for each of these three owners. But it'll let you allocate it properly, and that way you can know exactly what you need to know on your business.
And it could be coming from various sources.
It absolutely
you know,
could.
when we use credit card. when we-
Absolutely. So, but it's all about accountability and accounting for your business and treating it as a business.
Okay, now reflecting on what you just said, the monies that we invested in our own business, and, you know, you want to recoup that
Sure.
money.
Well, and when you say recoup,
Mean or be paid back.
that's a good, okay, let me explain that. Well, it depends on what you're going to do. First of all, if you're going to go to the bank for a loan, don't tell them it's a loan to you, it's equity in the business at this point.
Right.
Is that right?
Yes.
Because if they know that it's a loan that's going to be paid back right away, and it may get paid back out of proceeds of the bank loan, they're going to take that into consideration when they consider the loan ratios that they look at. You know, say, well, you already have $15,000 of loans already that you're paying back, and now you want to add another X number of dollars. Well, you can't do as much as you'd like because of that other loan. But literally, equity is what you're planning on keeping in the business usually. I do have categories that may be, and it's in the chart of accounts at least, loans to owners or loans from owners, where they are short-term cash flow situations usually, where they want to, or they mispaid something that should have been out of the personal account, I paid it out of the business, we'll put it in as a loan account back to the business. And then that will be okay with IRS. But anyhow, there are ways of accounting for other loans that you do want to get paid back for. The equity section usually is long-term, anticipated to leave in the business, and you'll recoup it at some point way down the road. You know, but you don't want to.
So that's after the 7 year when you already allocated how much you were taking out of the amount.
Yeah, you're going to take out distributions. You're going to have distributions coming out of equity, which I didn't show on this one as yet, where technically you're allowed to take the profits out of the business and pay it out to you. It reduces your equity owner, your equity share in the business. But again, that's tracked by individual owner, so you know. And that's basically, there's obviously a lot more stuff in here, but that's really what I wanted to show you today on everything. I think we're really at a good stopping point. Let you get out of here. Just again, show you what you can do with this software. There's so much more that you can do. Any other questions? Relinquish the podium. Yes, ma'am.
Maybe Nicole, Don. Give it to Nicole.
On your personal tax returns, it's not going to matter because you just got reimbursed for that from the check that you got from the company.
Well, if you can get the check back, we're not running an issue. Come say in January after my taxes.
Okay. That is where you have started.
Eye-opener for me, just, even with this software that he talked about, we have multiple homes, and everything was going in one kitty, and we operated so upside down on a couple of those homes for a couple of years without even realizing it. And finally, when we sat down and started visualizing, writing down, we found that we were so upside down with 2 homes, So with having the proper, business software in place, at a snapshot, you can immediately tell from month to month or even year to year that, things are not where it needs to be. So again, thank you. And my name is on this list this time personally. All right, guys, thank you very much.
I hope it was helpful also. I try to gear it towards your industry a little bit. So you
Oh yeah, I noticed that. I'm like, you seem like you knew what you did a little research, did you?